All right. Welcome to the Finance Essentials podcast, everyone. I am your host, Danny Hudson. It's really good to be back with you today. I know I took the last week off. We were actually traveling for the holiday. I had a great Thanksgiving, got to see a lot of family. Of course, we also have a situation where the weathers have been changing a lot. We got some snow yesterday, and if you can't tell, it's kind of playing some tricks on my sinuses. So I'm a bit stopped up. Hopefully it'll go away pretty soon. Taking some medicine and all that kind of good stuff, which I'm sure you love to hear about. Hopefully you all had a great holiday. As you can tell, one of the things that we tried to do whenever we got back, if you're watching the video, is get our tree up. Here's our Christmas tree. Whoop, right there. So we're starting to get all the Christmas decorations. We got some inflatables to put out in the front yard for our son. He's into that kind of thing. And then one of the neighbors down the road has like 30 of them in their front yard, and then so of course he thinks it's the coolest thing ever, and so he wants to do what the neighbor's doing. So we have a great show. This is actually another one that has been requested by multiple listeners, and I really hope you enjoy it. One of the things that I love about doing this podcast is that I almost never know exactly what's going on as far as the full topic, right? So when someone makes a suggestion and says, hey, you should do an episode on this, first I look at it and I'm like, all right, well, can I get 30 minutes out of it? And if the answer is yes, I start to do some research, and then I also am able to learn and able to grow, and then hopefully be able to pass that knowledge on to you guys, and then we all learn and we all grow together, and then that'll help us kind of set goals as far as being able to achieve financial freedom and security for us and our loved ones. So today's episode is on Bitcoin. I'm sure everyone who's listening knows exactly what Bitcoin and blockchain is, and if that's the case, then I probably won't be able to teach you anything. Hopefully you're holding some Bitcoin, because if you are, Bitcoin recently did hit a new all-time high. I think it crossed about 19,800. Not quite the 20K mark. Last I saw, though, it's actually trading down about 6 to 7%. Chances are, people that have been holding for a while have decided to take some profit. Let me fix my mic here. But yeah, so chances are a lot of people who have taken some profit that have been holding for a while, and they decided, well, maybe it's a good time for me to get out, because I don't know if many of you were around several years ago. I was also holding some Bitcoin at the time, not a whole lot, but a little bit, and we hit 19.7, and we then proceeded to go all the way back down. So it lost a lot of value over the next coming period. So chances are, like I said, a lot of people are kind of taking profit. But what I wanted to do today is teach you guys a little bit about what Bitcoin is, what value is in Bitcoin, and then kind of what a blockchain is. A little bit about what a blockchain is, but just to give you kind of an idea. Now, I'm certainly not going to tell you to go out and buy Bitcoin. I'll let experts, other experts teach you guys kind of about that. What I want to do is teach you guys about what Bitcoin is, what is the relevance for us, especially too as far as business owners go, working professionals. What does it mean to that group of people, and then also to what does it mean to the economy? What is the reasons why it's all of a sudden shooting up, and how does it relate to the larger economy and job market as a whole? So for our launching point, I actually pulled an article from Forbes, and it was called "The Case for Cryptocurrency: Why Even the Most Cynical Bitcoin Bear Should Consider Investing and How to Get Started." Now, I'm not talking to you guys about how to invest and get started and all that kind of thing. If you guys are interested in any of that, by all means, please feel free to let me know, and we'll go from there. But one of the things that Eric talks about, and his name is Eric Ervin in the article, and this is the part that I thought was very relevant for what I like to teach on this show. And he says, I believe that there are a number of narratives justifying a bullish move higher for digital assets. Now, keep in mind, when he wrote this, I believe it was back in May. The two primary long-term justifications are a potential store of value, and we'll kind of go over what a store of value is, and as a currency. And I think most of you guys are pretty aware of what a currency is, but essentially a currency is a medium of exchange, right? So rather than bartering, where I'm trading you, a log for some flour, we are using a medium of exchange where we're exchanging that, and then we're actually bartering, or we're actually buying and selling goods and that kind of thing. But the third, and this is the one that I get really intrigued about, but the third and slightly more obtuse reason to appreciate cryptocurrencies is the volatility they offer to speculators. With volatility comes speculators who bring liquidity, price discovery, and inflow of capital. So what that's essentially saying is people who kind of trade Bitcoin. A lot of the people, again, like we were just talking about, that probably sold off their coin once it hit a new time high, is people who are purchasing it with the idea that it's going to increase in value. So they're basically speculators. And so what they're the ones doing is they're providing the liquidity into the market to be able to exchange Bitcoin for either other cryptocurrencies or also for fiat currencies. So the US dollar, the euro, the pound, the Deutschmark, all of those additional currencies and things like that. So those are basically speculators. And so the first one, though, we talked about was a store of value. So essentially what a store of value is it is an element that is used to retain value against potentially inflation and the like. So the easiest example, and the one that gets compared to Bitcoin most often, is gold. I happen to own some precious metals, gold and silver, and essentially what they are is they're essentially used as a hedge against inflation. So if you look back thousands and thousands of years ago, from the earliest books and everything that was written, you see gold used as an exchange. I believe the Roman Empire used gold, and they actually had a very long-standing currency that actually survived for a very, very long time. That was actually used for trading, and it was very, very stable. And then once the currency began to become unstable was whenever, if it was, I'll use an example, but say it was a gram, right? And so what they would do is they would shave a little off the corner, and then it would go from 1 gram down to 0.99, and then you do that to 1,000 coins, you melt it down, and then you can make a few more of this, diluting your currency, the amount of outstanding coins, and kind of similar to what the Fed does right now with the USD, where they go like doot 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 on a keyboard, and the next thing you know, there's another $3 trillion that's in circulation. So that's basically what a store of value is. So the thought is that Bitcoin could be a digital store of value, similar to gold is on the precious metal side. Now, one of the things that he also brings up, which is a great point in the article, is he talks about how to use it, right? So say, for example, if you were to liquidate all of your assets, any equity that you have in your home, sell off your vehicles, that kind of thing, and then move, maybe you actually liquidate all of that down and then sell it off as gold. It'd be very difficult for you to move and to relocate hauling around all of this gold. But a Bitcoin, because you have a wallet, and you could basically store everything that you need on an external hard drive. Now, there's also some worries with that, right? Is that, I noticed that I had my USB drive that had all of my information on it, and it was in my suitcase, and the airline lost my suitcase. Well, there goes all of that. So there are some concerns that you have to be wary of when it comes to that. But the thought there is that you could use it as a similar store of value as gold, and it's just much more convenient to be able to travel. And it's also much more usable in terms of being able to use it as a currency, right? With a medium of exchange. It's very difficult for me, if I wanted to buy something from your online store, to purchase it in gold. Whereas Bitcoin, I have a wallet, you have a wallet, we pay a small transaction fee, bada boom, bada bing, my Bitcoin is now your Bitcoin, and then whatever I purchased would become mine. And then one of the other reasons why, too, that he talks about in the article, comparing it to gold, is because, and personally, I don't think that this is a great point. I get and this is why I'm going to bring it up, because I get what he's saying. I'm not familiar enough with the long-term viability of Bitcoin to know whether or not that I believe that this is true and that this is a long-term prospect, but I do want to present it because there are a lot of people that do. And what he says is that in March 2020, the total estimated market cap of gold was about 9 trillion USD. So essentially what market cap is it's the total value of all the gold, right? All the gold is estimated at approximately $9 trillion. By contrast, the Bitcoin market cap was around 170 billion. So this was in March. Figure that that's probably closer to 250 billion, 250 to 300 billion. And so what he's saying is that if you were to equate the two, you know, your gold is at $9 trillion, whereas your Bitcoin is only at $250 billion. And so if you were to equal those out and say Bitcoin is now worth as much as gold, he's saying that your Bitcoin now, whereas it just crossed 19,800, would be equivalent to $400,000 is what he's saying. And so he's saying that there is opportunity there if you believe that it is equivalent to gold, that it could appreciate a lot higher than what it is now. And so one of the also advantages of that is, and similar to gold, is that there's also a finite amount of Bitcoin. I believe, and I'm sure I'm going to get emails or texts about whether or not that this is wrong, but if I'm not mistaken, I believe that there's only about 18.5 million Bitcoin total. Like that's it. So once 18,500,000 Bitcoin are mined, that's it. That's all of it. And so similar to gold, right? Where if you think about it, back in the day when people ran out to California to get the gold out of the ground, you could probably go out into a river with a pan, you know, and you sift out, and the next thing you know, you sifted out some water and you've got 4 or 5 ounces of gold. Well, if you started mining Bitcoin 15 years ago, you probably got hundreds of Bitcoin immediately. And at the time, though, they really weren't worth anything. And now you will find that if people that are mining Bitcoin, they have massive warehouses that are set up with computers that are mining it. And what I mean by mining is that they're doing complex, we'll say complex computer application math, solving problems and that kind of thing. And then the blockchain kind of helps verify that. And then they're awarded with their Bitcoin, which is actually a great transition into the technology as far as what a blockchain is. But I'll get to that in just a second. And the other point, and this is the point that is the most valuable to me, and this is something that I try to talk about when we talk about financial freedom and the long-term viability of financial success, and how important it is for you to understand your financial position and understand your long-term goals from a financial perspective, because he talks about the subtle but diminishing utility of the US dollar. And so he uses an analogy that's basically like the boiling frog analogy, where the USD has historically held a position as the world's reserve currency. And what the reserve currency is basically when transactions are held on the international stage. Oil is the easiest one because Saudi Arabia has basically declared the USD as the currency to purchase oil. And so all of these countries, it's essentially required for them to hold a certain amount of USD, US dollars, to be able to make certain international transactions. So the US dollar is the reserve currency of the world. So very few places in the US will you find that they're holding, you know, the Japanese, well, I mean, I guess maybe the Japanese yuan might not be so bad, but other third, fourth tier currencies, they're not really required of the US. And as I'm sure most of you guys know, pretty much all of our transactions here in the US are done by USD. We don't really tend to have much competition regarding competing currencies. So, and the reason for that is because the dollar held a strong competitive advantage over alternatives, and it was easy to use. It was backed by a stable government who was committed to maintaining the stability of the currency. Now, that point is debatable.
As I'm sure you guys have seen, we used to have a gold standard. We got off the gold standard, then it kind of became the oil standard. And then we went from the gold standard down to fractional reserve banking. And now we're basically off of fractional reserve banking. Fractional reserve banking, to give you just some cliff notes, banks were required to hold, I believe it was 10% of their deposits in reserve. So if there was ever a run on the banks, they would have 10% of cash of whatever it was. I believe in, what was it, April or May, basically the Fed came out and they were like, yeah, don't worry about that anymore. Just loan that money out. It doesn't matter. You don't have to hold anything in reserve anymore. And that was kind of their way of being able to provide additional liquidity into the markets. The problem with that, though, is that now all of that money is gone. If you went to your local branch and maybe you had $5 million and you're like, hey, I got $5 million in here. I want $5 million in cash. Most likely they're going to go, yeah, we don't have that. I know the bank that I used to work at, it was fractional reserves. But even then, if you were to go in and request that kind of money, they wouldn't have it. Or even if they did, they wouldn't give it to you because that's not your money. That's the bank's money. So that's kind of what the stability for the currency and what's going on with the USD. And so, he also brings up the fact that there was a level of trust, right? All of these other trusts, all these other countries trusted the U.S. and the USD, and that's part of the reason why. But he also brings up that over time, fiscal deficits, loose monetary policy, and banking regulations have steadily chipped away at the USD's stronghold. I know there are other countries, for example, China, Iraq had brought this up before as far as getting away from the USD as the world reserve currency. So that's the big one to me, because the store of value, the currency, so on and so forth, those other topics, they could potentially impact us on a day-to-day basis. But the utility of the dollar, if we were to lose that impacts everyone, right? That is a global thing. And obviously everyone here in the US would be significantly impacted by that. That's when you could potentially experience high levels of inflation. Unfortunately, you could also potentially have hyperinflation, that kind of thing, which would basically wipe out, if you have any money saved, it's basically wipes out, everything that you've got. So to go back to Bitcoin, I know we touched briefly on as far as what a blockchain was. And so I wanted to give a little bit more detail to help kind of allow you to understand the differences between what Bitcoin is and then what a blockchain is. So Bitcoin is basically the currency, right? So if I have a checkbook and I'm writing checks for all of my purchases, that check that I'm physically giving you is what would be used as the currency. And then my checkbook, as I log and as I track everything and keep it on a ledger, that is what a blockchain is. And so the distinction there is that a blockchain is basically the technology that is used to verify all of these transactions that are happening using Bitcoin. So the easiest way to explain it is that you have a blockchain, and that you have blocks, and then all of these transactions and all this activity goes into this block, and all of these transactions keep filling it up and filling it up and filling it up. And then once that block is full, it's locked and it's chained to the prior ones. So you could basically go back from the beginning of the blockchain and look at all of the transactions and identify all of the transactions ever since the beginning. And how it does that is it has all of these computers that are linked, and they're part of the blockchain network. And so the biggest advantage that you have using a blockchain is that it's decentralized. I don't know if a lot of you remember a little while back, but Venezuela had talked about, obviously because of their hyperinflation, introducing a digital currency that was backed by oil. Well, the reason why that wouldn't work is because their government is the one that wanted to control the cryptocurrency, right? They wanted to control the currency, which means that if they were the ones in control of it, it completely it kind of delegitimizes the idea behind blockchain, which is the decentralization and the verification that all of the other computers and all the other networks on that network would be able to confirm. So that's one of the reasons why I love it, because what it does is it also helps prevent manipulation. It's very difficult to be able to manipulate. Now, you can get scammed. I'm sure that you probably, well, maybe not, but there are people that are on Twitter that are like, oh, you know, you send me 1 Bitcoin here, and then I'll send you 1.2 Bitcoins over here, and whatever and whatever. And once you send that Bitcoin or whatever coin that you're sending, it's gone. I mean, there's nothing that you're going to be able to do there. You can't call a bank and get it back. So another thing that is very interesting as far as the blockchain goes, is that there's different types of information that can be stored on a blockchain. The easiest one and the most recognized one is just simple transactions. So for example, if you wanted to buy a PS5, I had a PS5, I only took Bitcoin, right? And so you send me over, what would that come out to be, like 0.02 Bitcoin or whatever it might be at the time. There's a transaction, it's recorded, it's on the blockchain now. It's done. Once it's there, you're not taking it off. And so one of the big benefits of that is that the data is irreversible, right? It's a benefit because once that transaction is done, it's out there. It's permanently recorded. Everybody can see it. Now, they're probably not going to understand exactly what that transaction was, but everybody on the blockchain would be able to see it. They're able to verify it, and that's how it's able to prevent fraud. So that's kind of a high-level view as far as what Bitcoin and blockchain is. Again, I like Bitcoin. I've held Bitcoin. I don't have any Bitcoin right now. I have dabbled a lot more in other cryptocurrencies, what they call altcoins. I am still holding some Ethereum. Ethereum is more of a platform. It's not necessarily a currency, kind of like the way Bitcoin is. Ethereum is more used for like smart contracts. And so say, for example, if you wanted to create a coin, like I'm sure probably a lot of you are aware of the coin that Facebook was trying to make, right? So that would have been like an altcoin. You could use Ethereum as the platform to create your own currency. So what you'll find is a lot of altcoins are actually in deviations of Ethereum, not necessarily in Bitcoin. Bitcoin's kind of its own thing. But the point that I really wanted to make with Bitcoin regarding the utility versus the US dollar and the diminishing quality of having that as a reserve currency leads me to the next point that I wanted to make. And I know we've talked about it on previous podcasts. If you haven't heard me talk, or if you're new to the show, by all means, please feel free to go back and listen. We don't talk about it a lot, but it's related to government monetary policy, right? We've talked about how the Fed's balance sheet is up to approximately $7 trillion. Chances are the next stimulus within the next year or so, I wouldn't be surprised to see that number closer to 10. And basically what that means is that they are inflating the current monetary supply to provide liquidity into the markets. But what I did was, though, is that I wanted to tie it into, again, like I said, something that's very relevant to us as small business owners, as working professionals, as people who are out there working. And so I came across an article by a couple of guys that I've done shows on before, James Harrigan and Anthony Davies. I follow them on Twitter. They're great. They provide a lot of great content. But the article was why 2028 could be the year the debt crisis finally hits the fan. And so what they talk about is the CBO, which is the Congressional Budget Office, I believe. And what they do is they provide projections, up to 10-year projections of government revenues, of government expenditures, as well as the debt. And so the reason why they made this article was because they wanted to analyze how accurate the CBO projections actually are, and if the numbers that they are now providing to us are accurate, and whether or not that they make sense, and how do we fact check them. So what they talk about is the article. The CBO recently put out their projection, and they are claiming that the U.S. federal debt will be about $38 trillion by 2030. Now, the title of the article talks about 2028, not 2030. And so what they wanted to do was they wanted to look at the historical biases and then apply the historical biases to their current projection and see what that number looks like. And so what they did was they went back to 1997, and so they said since 1997 to current, the CBO has made 198 revenue projections, which is essentially government revenue, which, again, we won't get into taxation and my my thoughts on that, but essentially their tax revenues is what they're claiming as revenue. Out of 198 of them, 80% of them were too high. So 80% of the time, the CBO has overprojected government revenues. And then they broke it out by 1 year, 5 year, and 10 years. So for 1 year, they averaged about 5% too high. 5 year, they averaged about 17% too high. And then 10 years, they average about 26% too high. Now, one thing that they can't really, and they mentioned it in the article, one of the things that you can't really necessarily do is all of a sudden make adjustments to that based off of policy, right? So you have a projection and then policy changes, right? Because that's what government officials like doing. They love making policy changes and putting their name on it and then telling everybody about how great they are. And so policy will change, and therefore some of these revenues and things will change. And so that's why they have a pretty decent sample size, which is about 200 or so projections. And then regardless of who is in office, over that time period, about 80% of them were too high, especially their long-term projections. And so then what they did was they looked at spending projections. And so what spending projections are is basically the federal budget, right? Well, I wouldn't even say budget because their budgets are basically worthless because they're just going to spend, whatever they want to anyway. And so the annual expenditures from the government, 60% of the time they were too low. And then they were only off by 1% for 1 year, which makes sense because you should have at least a budget that you can look at. And then 4% too low for 5 years, and then 10% too low for 10 years. So to make that easy, right, what they're basically saying is that in 10 years, we're going to spend $100. Well, actually, I take that back. Let's reverse that. Well, no, we can stick with that. We'll say in 10 years, they say that they're going to spend $100. Well, actually, they're off by 10%. So they're actually going to spend $110. So if you're keeping score at home, their revenues, way low, their spending, way high. And I'm sure if any of you have ever done a budget, that's not exactly where you want to be. So, as a result, over those 198 future debt projections, they were generally 25% too low for 5-year projection and 55% too low for the 10-year projection. Now, you're probably saying, Danny, what the hell does that even mean? Why do I care about this? Well, the reason why that you should care about this is what they're saying is that in 2030, our debt should be about $38 trillion. But in actuality, by 2028, or in that neighborhood, there's a good chance that that deficit or that federal debt is actually going to be closer to $50 trillion. Now, again, we know that there's a new president that's coming in, Joe Biden, who has, I'm pretty sure, not talked about spending less at all. Republicans didn't spend less either, and they actually wrote the biggest checks in the history of the world with their recent stimulus packages and that kind of thing. It dwarfed the approximate $1 trillion from years ago, from 2007 2008. So then it was like $1 trillion. I think at this point they're up to like $8 trillion. Probably more like 10 whenever the dust settles, after all this COVID stuff kind of goes on. And so what that's doing, though, is that's piling on the national debt. And so the point that I loved, and this was all new to me, but it's history, and I love this part. I thought it was super great, is that they talked about, well, have we ever seen an instance before where something like this happened? And so the example that they used was back in the 1700s. I think it was the late 1700s, which would make sense. But it was talking about the post-Revolutionary War. And so what they had was they had continental dollars, that were in circulation at the time. But again, war driving up costs, they print money, and so inflation was out of control as far as the continental dollars. And so what they did is they formed a government in the late 1700s, and they basically decided, all right, no more continental dollars. We're doing away with continental dollars. We're introducing a new currency, and we're going to call that, I don't know, how about the United States dollar? So we're going to introduce this new currency. Now we're going to control it, right? Now at the time, I don't know if it was backed by gold at that point. I don't know if it was on a gold standard. But anyway, they introduced the US dollar. And so now they have control of it. Now this is the late 1700s, did away with continental dollars or continental currency. So if you had, $100 of continental currency, well, congratulations, you now have one shiny new US dollar. And at the time when the continental currency was done away with, the government debt totaled approximately 15 times of annual revenue. Now, how is that related to today? Well, if we relate that to today, currently we're at about 8 to 8.5% times annual revenue. Now, if you look at annual revenue, their annual revenue, I believe, is around $3.5 trillion, and then they spend $4 to $4.5 trillion. Now, the CBO, based off of their projections, are expected to have a relatively flat period over the next 10 years of 7 to 8 times, federal revenues. Now, that is if you believe the CBO projections. Now, if we look back at what we just talked about, we shouldn't believe their projections because historically they have not been accurate. Based off of what we can see here, by about 2028, we should be seeing approximately 15 times, the national debt be 15 times the annual revenues from the federal government. Now, if we apply that to the continental dollars, that is basically when a new currency was introduced, right? The debt at that point was unmanageable. They couldn't do it, and so they wiped the slate clean, and then they introduced the US dollar. Now, I don't want to instill any panic, any fear, and go, oh my God, we need to go and buy all the Bitcoin that we can. I'm not saying that. What I am saying is that this is a very interesting point that these geniuses made, and that the only other time that we've hit a 15 times annual federal revenues is the time when they completely wiped out the current currency of the time. Now, I saw a couple of articles a little while back where the Fed was talking about introducing a digital currency because cash is a carrier or transmitter of COVID or, whatever they were talking about. So these are discussions that are happening at the highest levels, and it's worth monitoring. But the main reason why I bring it up and how we always talk about this on the show is, what does this have to do with me? Well, the biggest thing that it has to do with you is diversification. We talk about diversification of revenues and how important it is to be able to pivot and understand different revenue streams to make sure that your bottom line and your top line are as firm and as secure as possible. Well, in a scenario where you potentially have the opportunity to be able to diversify and potentially hedge against certain circumstances like this, why wouldn't you do that? And now a hedge is basically saying, I want to make sure that if this does happen, then I'm at least partially covered, right? Because if you're literally just stuffing USD into a savings account or even under your mattress, and then all of a sudden tomorrow they come out and go, all right, well, for every USD you've got, now you have, or every 100 you have, you now have one new currency. So you just literally lost 99% of your accumulated wealth. And so being able to diversify and understand the potential implications for things like that are super important, and everyone should be aware of them. So that's the show for today. Go Bitcoin. I hope you guys are holding some. If you're not, look into it. And if you guys have any questions, let me know. But I love doing this show. I thought it was great. Any kind of competing currencies and kinds of things like that, I always think is super fascinating, and I love that kind of stuff. So I hope you enjoyed it. I didn't plug everything at the beginning of the show. I'll give you guys a quick update. The webinar is done. It's on the website. I loved it. I loved doing it. I thought it was great. We got some great questions at the end, so we were able to do the Q&A. It's going to be on the site. It's only going to be $25. I think it provides way more value than $25, especially too if you're a small business owner and you really want to be able to understand the role of finance. But also too, make sure you follow us on Twitter. Make sure you follow us on Facebook. Make sure you follow us on LinkedIn. We put daily content on there. I think it's a great follow. I think we provide a lot of really, really good information. And if you guys happen to have any additional topics for any future shows, by all means, let me know. I love hearing them. And so thank you, and hope you enjoyed the show. Have a great rest of your day.